Good evening, everyone. Assalamu alaikum warahmatullah. As we step into the new year, in the year 2025, it's the right time for uh, us to give you handful insights about the auditing and taxation in Saudi Arabia. This is Mohammed Afnaz, Arabia. Basically, two webinars, two sessions in this particular webinar. One is on the audit in Saudi Arabia, that is to be followed by foreign companies, and another session on taxation, which will be taken care, by Mr. Sayed Khidr on the taxation part, and Mr. Sayed Omar on the audit part. For the benefit of the participants, you will be allowed to put up the question answers in the Q&A section in this particular Zoom. And the Q&A section is already opened up, so you can post your respective questions. And the question answers will be taken up at the end of the presentation, which is after the taxation session together. So without any further introduction and delay, may I invite Mr. Sayed Omar to take up the session on the audit. So, Sayed Omar, are you available there?
Yes, Assalamu Rahmatullah. I hope everyone is well. Firstly, thank you for giving us this opportunity and taking time to attend this seminar. So the topic is sort of something that's very common but still misunderstood by many. So I'll quickly go over the topics because we don't have much time and we want to accommodate the Q&A as well. So let us start. Okay, I believe everyone is able to view my screen. So the first question here is again, like this is a very common topic. And if we go by the textbook definition, what is an audit? It says it's an independent examination of financial statements to ensure accuracy and compliance with regulations. These three lines have a very broad scope. Time will not justify if we start explaining this in detail, but I hope that we are at least able to get something out of it by the time I finish my last slide. So firstly, why are audits mandatory? In a general perspective, it's basically to ensure transparency and to ensure that there is accountability and reliability in financial reporting. The numbers that are presented, what numbers are reported and what numbers are accepted, all of these are transparent. All of these make sense to the stakeholders. Now, the stakeholders being the primary stakeholders in any company are the shareholders. And after that, it will be the authorities like SATCA and your customs and your Ministry of Commerce and the MISA. So the next is to protect the stakeholders such as investors, creditors, and regulators. The investors as well should be aware as to what is the financial condition of the financial statements. And an auditor's report gives credibility to this financial statement. So an auditor, the financial statements without an audit report makes no sense. It just gives numbers from the management. Until unless the auditor signs on the financial statement, says that yes, these numbers do make sense, these are good to go. That is when the investors, the creditors, and the regulators also gain the assurance on the financial statements. The next is scope of mandatory audits in Saudi Arabia. As most of us are aware that the audits have been mandated for certain companies, not all the companies. The foreign companies, there is no exception. The audit has to be done irrespective of the shareholding percentage or irrespective of the revenue. But when it comes to certain Saudi companies, there are exemptions, inshallah, which we will discuss in the next slide. And the last point is applicable to listed companies, certain private entities, and regulated sectors. So a listed company, there is no other option. They have to do the audit, irrespective again of the shareholding or the stakeholding or the revenue. And private entities, there are certain entities that are mandated by the authorities. So the next is the regulatory requirements in Saudi Arabia. Firstly, let us look to the authorities. Now, there are certain confusion around this as to what authorities and what jurisdiction that this particular thing fall into. Now, we have Ministry of Commerce, which takes care of the company law. So Ministry of Commerce is the one that dictates the law, and they take up the responsibility to make sure that all the financial statements are uploaded to the system called Qawaim. Okay, so it is mandated by law since 2015. Many of us are still unaware that financial statements are just the auditor signs the audit report and it's done. That's not the case. These have to be uploaded to the Qawaim system. The next is SOCPA. So SOCPA again is an authority that makes sure that the auditing standards are being followed by the auditors. So whatever the auditing is happening, these are in compliance with the ISAs. And the next authority we have is ZATCA, Zakat Tax and Customs Authority. Now, this authority is one of the, I'll say, most common, I'd say, authority that we all deal with because we do the VAT filing or income tax filing or withholding tax filings. So even they rely on the financial statements as to what exactly numbers have been reported and what has been reviewed and approved by the auditor. The next is the Capital Markets Authority. This is for someone who's listed company will fall under the compliance of the Capital Market Authority. And last is the compliance with IFRS. Now, IFRS is mandated since 2007 in Saudi. So all the reporting that has to be done should be as per the IFRS. We have certain cases where the accountants are unaware of the standards and they're following the general accounting, like the buying and selling accounting. And this again later impacts when the financial reporting happens, due to which the tax is inflated. The profits are inflated, due to which the tax is much higher than what it should be. Now, again, the importance of audit. So firstly, one of the most important or one of the most important aspect is the ensuring the financial integrity. Now, financial integrity, again, is a very broad word, broad words. If we want to break this down, so there is trust among the investors and stakeholders and regulators that need to be built. It doesn't come out just like that. For example, if you're dealing with one of a foreign company as an investor who's not in Saudi, so they have no idea what exactly is happening. So they rely on these numbers that come from the audited financial statements for their group reporting. So the group auditor as well will rely on these numbers, and he will rely on the work of the component auditor who will be here in Saudi. The next is to detect and prevent financial irregularities. Now, sometimes there might be fraud that is happening and the management is unaware. There might be no internal controls. So these might be detected in the statutory audits, and the auditor might point this out, which might in turn save some money or a lot of money to the company. Next is the economic growth. Right now, like MISA is relaxing a lot of laws. So when they're relaxing, parallelly they need the transparency and reliability as well towards these companies. So that transparency and reliability comes with what numbers are being reported in the financial statements, and to make sure that these are accurate. Again, the PPP, which is the public-private participation, these things are going to grow in the next 2-3 years because we have a lot of events coming up, like the Asia Cup, and then we have the World Cup, and then we have the Expo, the Riyadh Expo. So there are a lot of things coming up, and again, the numbers that are being reported, the financial statements that are being prepared, these will be very critical to show that yes, the company is sustainable, the company has enough liquidity, or if the company can manage these projects. So this will be a license, just like a ticket to get into these projects. Now, regulatory compliance, I believe this is the most critical aspect when it comes to the finances. There are fines and penalties. Before it was a bit relaxed, but last year a lot of companies started receiving the messages that there is fine for not submitting the financial statements on time. And hopefully from this year, all the participants, I hope, have already engaged with the auditor. If not, please get in touch. Because this is the right time. Any delay will cost you up to 500,000 riyals. The fine starts from 6,000 riyals. It might go up to 500,000 riyals. Again, implications of not conducting audits. Firstly, there is regulatory penalties, which I just spoke about. There are fines from Ministry of Commerce, even fines from SATCA if your financial statements are not uploaded on time. So these financial statements might go around and the tax certificate might not be issued. So there is a risk of that as well. So you just need to be careful as to the reporting deadlines have been met. The next is risk of business suspension or license revocation. If the financial statements are not uploaded for a certain period, even your license might be revoked. The next is legal consequences. So there might be potential lawsuits. Sometimes what happens, the financial statements might not be prepared, and this might result in the shareholders' dispute. And when these disputes go to the court, this complicates the process. So to have that the transparency and to avoid fraud or even misrepresentation, better to have your audits done on time. The next is increased risk of disputes among shareholders. Same thing. So the shareholders might be might be having differences, and financial statements might be it might break the ice for having a solution. Now, reputational damage, this again causes sometimes you have bank facilities and there are loans and there are facilities with other institutions as well. So not having financial statements prepared on time, the facilities might stop. They might stop your facility or cancel even your facility at a time when you might need it most. So it's better to have these financial statements prepared I would say before April, before the tax filing is done, and have it uploaded so that you don't have that risk that the tax certificate is also valid as well as your financial statements are on time. Next is difficulty in securing loans and attracting new business partnership. I believe everyone knows this, that without financial statements, there is no loan. There are no facilities provided by any institution if there is no audited financial statements. The next is operational risks. Now, the undetected frauds or financial in the financial records is very common. We see this whenever the audits are happening. These are intentional as well as unintentional. Not always it is intentional. There might be unintentional, which the auditor might pick up and he might report to you, where you might again save cost or you can improvise your process much better. Last is inaccurate tax filings leading to dispute with ZATCA. I believe a lot of companies have faced this in the recent past, where the ZATCA has come back asking for additional documents based on what numbers were reported. So again, the numbers you're reporting, you need to be very careful. You need to make sure that whatever is being reported has or mirrors exactly with the TB or the numbers that are there in your financial system. Again, benefits of conducting regular audits. Compliance. So this compliance is a very important word. Compliance not only falls with one ministry, it falls with the Ministry of Commerce, ZATCA. Again, you have your banks. There are multiple stakeholders here with whom you need to comply. And you need to make sure that all the legal and tax regulations are being followed up with your financial statements. Improved financial management. So identifying the inefficiencies and reducing the financial risks. Again, like we discussed in the last slide, there's a very important aspect that needs to be taken care of. Again, building trust. Trust with your investors, trust with your bank and customers. Financial statements is a very good tool. And early detection of issues. If there is any going concern issue, if there are any problems, so these problems can be taken care of in the early stages. So to conclude, in summary, audits are a legal requirement, yes, without doubt, and non-compliance results in severe penalties. Again, this is one of the biggest issues that currently is going on. And the doing an audit on a regular basis, it not only protects your business from regulatory risk, but it also contributes to your financial stability and growth. So you need to plan your business towards growth, and financial statements are one of the most important tools that you can use. So Q&A, I think we'll take in the last stage. I believe Khidr is ready with the tax presentation. Thank you so much.
Thank you so much, Umar, for enlightening on the audit part. It is wonderfully useful, and we will have the question answers taken at the later stage. So, without any further delay, may I introduce Mr. Sayyid Khida to enlighten on the taxation part of Saudi Arabia and what are the various compliances to be followed by foreign companies in Saudi. Over to you, Sayyid Khida.
Thank you, Afnas, and thank you, Umar, for briefing us as to what audit compliance are in Saudi Arabia. Hello everyone, this is Syed Khizr. I head the accounting and tax department at Analytix in Saudi Arabia. So basically what we will be looking at today is what my viewers can expect after this webinar is as to what compliances they'll have to follow in next 3 to 6 months. Okay, we have conducted many webinars and even events as well, explaining about or briefing about what kind of taxations we have in Saudi Arabia, may it be zakat, may it be corporate income tax, may it be withholding tax, may it be transfer pricing, may it be VAT. So today we are gonna speak specifically what our taxpayers will have to comply with in next 3 to 4 months. So this will be covered in 4 points, as you can see on the screen. The first one will be zakat and corporate tax, the transfer pricing, and we'll also speak about extension of amnesty scheme by the authority, which is ZATCA, and e-invoicing. To start with, as we know, corporate tax and zakat. Corporate tax is applicable to those companies who have a foreign shareholding, and zakat is applicable to those companies whose shareholding lies with local residents, a Saudi national or a GCC national. The corporate tax, the percentage of corporate tax is 20% and zakat is 2.5%. Yes, there is a huge variance. However, each and every shareholding has certain benefits. Now, with regards to what is the deadline for filing of these taxes, so the final tax due must be submitted within 120 days from the end of the year. So most of our viewers over here may have the financial year ending 31st December 2024. So 120 days from this date, which is 30th April 2025, is the deadline for all zakat and taxpayers to complete their corporate, either the corporate tax filing or zakat filing or both. Because in mixed liability company, you'll have to file both zakat and corporate tax. So what are the implications if not done? If this is not done on time, there'll be a penalty of up to 20,000 Saudi Riyal only for delayed filing. Okay, I'm not speaking about any other penalty. This is only for delayed filing. Apart from this, now with regards to there was any tax due, then there'll be a penalty of 1% for every 30 days. For example, my filing was to be completed by 30th April 2025, but I missed it. I did it on 1st of May. Then what's going to happen? So 1st of May, the minimum penalty that I can expect for delayed filing is 20%. And apart from that, there'll be a 1% penalty for non-payment. If there was any corporate tax payable, then 1% of that amount I'll have to pay in the month of May. So this is also one of the topic that I would like to brief about, like what are the deductible and non-deductible expenses for zakat and tax. Most of our clients come up asking what these are. So we thought let's have it through a webinar so that all our clients are educated as to what the corporate tax or zakat deductible and non-deductible items are. So all the ordinary and necessary expenses of earning an income subject to tax paid or accrued by the taxpayer during the taxable year are deductible. Okay. So anything which is very much required to generate the revenue is deductible. Now, what is non-deductible? So anything in capital nature or expenses that are non-deductible as per the provision of the law. So this is what most of the clients here or most of the businesses working in Saudi Arabia don't know about. What are the provisions? What are the non-deductible items? Now, yes, these are non-deductible, but how can we make it deductible? This is something important, very much important, that Analytix can help you with. Now, non-deductible expenses, as you see, these are some of the items, okay, not all. These are few of the items that are deductible, like expenses not connected with the earning of income subject to tax. Now, we may have a question, what exactly is this about? Just to give you an example, we may have a team dinner or team lunch, okay? Is it required for me to generate revenue? No. If I say my team or the people working under me that I will not be able to take you for lunch or dinner, okay, will they say no, will not work? It's something that I do it optionally just to keep my staff or my employees happy. So these kind of expenses are non-deductible. This is non-deductible not only for corporate tax or zakat, even for VAT. So please, whenever you have these kind of expenses, make sure that you do not claim input credit on these expenses. Expenses not related to a tax year, then again, what kind of expenses can this be? So basically, the expenses of rent, prepaid visa, CR. So basically, at the end of the year, we need to make sure that we have the prepaid recorded so that we present the correct figures, correct expenses for that particular year. Then provisions of all kinds. What are the provisions? Provisions for leave, provision for airline ticket, provision for end of service benefit. So these provisions are non-deductible. Then capital expenses. Then cost of repairs and improvement of fixed asset. Just to give an example over here, I have a laptop, which is an asset, and I spent 100 real on repairs and maintenance. So this has to be capitalized. The percentage that is acceptable as expense is only 4%, which is 40 real. Anything above 40 real, then I'll have to capitalize it. Fines and penalties paid or payable to any party in the kingdom except those paid for breach of contractual obligation. Now, what kind of fines or penalties are this? The fines of, we see in the books of our clients, they are traffic violations. Okay, and these traffic violations are going in hundreds and thousands of reals, and we tend to record them saying that these are business expenses, and we try to claim this. But however, as per the authority, fines and penalties are non-claimable because this is something which we would have done wrong, and we are trying to claim it. Bribes or similar payments which are considered as criminal offense, there is no explanation required on this. Then bad debts written off without CPA certification. This we see in major cases there where we would have passed bad debts in our books as an expense, but however, we fail to collect the CPA certification, or we fail to notify our auditor asking them for certification for this bad debts. Now, we will also have to make sure that what did we do in this regard, so that what did we do to make this collectible. So basically, if anything is more than 100,000 Saudi Riyal, then they should be we should have filed a case against that party, which there should be a court hearing, there should be a court order which says about the opposite person to pay, and still if he fails to, then we can move it to bad debts. Then recreation expenses such as cost of parties, sport gatherings, recreational trips, and similar activities, these are not claimable, and there's no explanation required in this regard. Income tax or related fines or penalties paid in the kingdom or to any other state. Now, one of the important thing that I would like to highlight over here is withholding tax. Withholding tax is not the cost for the company here in Saudi Arabia. It is the tax that the person non-resident who is generating revenue from Saudi Arabia, it is his cost. But what we do is, most of the time we would have not spoken, or we are either we are unaware of this, or we would have not disclosed this to the vendor, and the vendor backs out saying that I'll not bear this withholding tax. So in this at this point of time, what we do, we record this as our expense. So these expenses are also non-deductible for the purpose of corporate tax or zakat. Now, cost of materials or services provided by related party in excess of prices used by the independent parties. This is one of the important topic we have been discussing from quite a long time. This is relating to the transfer pricing requirements that are in place in Saudi Arabia. We will have one slide on transfer pricing as well, and there I can explain you about this. Then unrealized exchange losses. So this here we'll speak about what transfer pricing is. On 31st Jan 2019 is when the Zakat authority here, Zatka, issued the TP bylaws, which applies to all taxpayers subject to income tax law. Okay, this was first implemented to all the companies, foreign companies who had to pay corporate income tax. Okay, and then even if they are mixed, these were not applicable for Zakat payers. Okay. Then what transfer pricing is? The transactions include goods or services, loans, intangible assets. So all these kind of transactions that we have with our related party fall under the purview of transfer pricing. So what are the changes in the TP law? Starting from 2024, okay, 1/1/2024, even the zakat payers are required to comply with the TP requirements. So what exactly is this TP compliance about? The TP disclosure form must have to be filed within 120 days along with the corporate or zakat filing. That has to be filed. Basically, we need to give the details as to what the related party transactions are, who are the parties, where are the jurisdictions, what kind of sale or purchase have we made, what kind of TP method have we followed. So basically, all this data has to be provided to the authority along with a certification from the local auditor who certifies that this company or this particular entity is compliant to their TP policy. Okay, so this was for corporate tax companies, but however, starting from this year, when we are doing the filing for zakat, as of 31st December 2024, which has to be filed by 30th April 2025, we have to comply this even for zakat payers as well. Apart from that, we'll have to maintain local file and master file depending on if we have reached the threshold, and the threshold is 6 million. Now, with regards to zakat payers, the TP disclosure form and the affidavit is mandatory from this year. Okay, the local file and master file, there is some relief given by the authority. If it is less than 48 million, there is no need for the local file and master file. 48 million, but less than 100 million, it's optional. But starting from phase 2, which is for 2027, it will be mandatory. And more than 100 million, it is mandatory right away. If you have any related party transactions of more than 100 million, then you will have to comply with the local and master file. Now, next to move on, extension of amnesty scheme. As most of us who are in Saudi Arabia since 2019 or so must have heard this, and this extension has been happening since then. The scheme is an initiative that the authority has bring in, okay, with wherein any kind of penalties will be waived off. Okay. Now, what this exemption is about? The exemption from unpaid financial fines include exemption from fine resulting from late registration. Maybe we would have not registered for VAT yet or corporate tax yet. So any penalty arising out of that is exempted. Exemption of delayed payment fines and overdue. This also is exempted. Exemption of VAT return correction penalties. So this is one important topic again, as to if you would have done anything wrong in a VAT returns, claimed or overstated, understated. So these kind of corrections in the VAT return can be corrected. Also, exemption from the violation of VAT field detection and e-invoicing based on Article 45 of the law. So type of taxes included in the initiative, VAT. So what we can do in this regard? For example, unintentionally, our accountant would have typo error. There would have been a typo error. Instead of recording an expense for 5,000 plus VAT, we would have claimed VAT for 50,000 plus VAT. So basically, we have over claimed the VAT. So in this regard, since once we are about to close our books, we find these kind of transactions, then this is the best time that we try to correct that particular VAT return. Okay, and and any penalty arising out of this particular adjustment is waived out by the authority. Similarly, income tax, we would have filed our income tax based on a draft financial statement, and the final financial statement would have spoken something different, wherein our liability of tax is more, or even the figures, though the tax liability is not increased, but there are few changes in the figure. So this is the best time that we make corrections to all this. And even withholding tax, we see cases where we are not aware that we had to pay withholding tax. So in these cases, Analytix can help you assess your books, okay, assess the payments that you have made to non-residents, and guide you as to what exactly the withholding tax is. Not only guide you, we are ready to help you with the filing. So the initiative also covers real estate transaction tax, wherein the actual value of the property may be 1 million, but we would have reported only 500,000 and paid tax only for 500,000. In this case, we can have this corrected, pay tax for the 1 million and the penalties, any penalties waived off. Similarly for excise as well, wherein we have underreported, then we can make the correction and the penalties are waived off. Now, the next topic that we'll be looking into is invoicing. Before we pitch into it, let's go back and see when the authority, the ZATCA, came up with the VAT regulations Saudi Arabia. It was January 1st, 2018 when VAT was implemented. VAT was implemented with 5%, but however, at the time of COVID, the percentage was revised and it is now 15, it was 15% and till now it is 15. Yes, there are rumors that the VAT is gonna be less, but no rumors are to be believed until there's a decision from the authority. So what authority, the tax authority here in Saudi Arabia, they are improvising the compliance. So from 5 to 15, then what they did was e-invoicing. Okay. So e-invoicing was split into phase 1 and phase 2. Phase 1 of e-invoicing was where you are no more, you are no more required to issue paper invoices. All the invoices that you issue should be from system, from an application with QR code. There are many doubts with our clients as to is Arabic mandatory from the e-invoicing or was it there in past. So the Arabic part of invoicing is there from day 1, okay, from 1/1/2018. This date itself you had to issue your invoice in Arabic. Yes, as we say, they have been improvising and more compliance will come into picture. So phase 1 was implemented on 4 December 2021, wherein you cannot edit, delete any invoice. The only option is available is pass a credit note and pass a new invoice. Similarly, phase 2, which started from 1st Jan 2023, yes, the authority gave some relief and they started to implement this particular phase in waves. Wave 1, Wave 2, Wave 3, wherein they got the taxpayers based on their revenue, annual revenue. Right now, the last month, the authority has announced the new wave, which is Wave 19, wherein all companies who have reported a revenue of 1.75 million Saudi riyal in 2022 or 23 will have to comply to this particular requirement. So what exactly is this requirement about? Basically, we'll have to integrate our accounting application with that of authority. There's a portal called Fatura. So you can log into that portal using your credentials that are available for your ZATCA login. So same credentials have to be used, or generate OTPs and integrate your accounting application. So this, you can take help from your accounting application service provider who can help you with the integration. Few service providers do it for free and few charge some fee to integrate. So by this, I end my presentation. I hope it was helpful. I hope my discussion on various topics of taxes and what will have to comply in next 3 to 6 months was helpful, and we can help you out if you need anything in this regard that we have discussed. Thank you. Now let's move to Q&A.
Thank you so much, Kedar. We have the questions that have been raised in our chat window. I'm going to be posting the questions in the chronological order that we have received. For first, the audit part. So the question first is to Saeed Omar. Omar, you're available there? Are you ready?
Yes.
Thank you, Omar. So the first question is, what are the compliance to bring the money as investment or AKA company capital in Saudi Arabia? I repeat, what are the compliances to bring the money as investments or company capital in Saudi Arabia?
Okay, so regarding the compliances for capital, let us discuss capital. Capital will be subscribed and paid up as per your article of association. So whatever you're bringing as capital, that will be brought through your bank, and you can get a capital deposit certificate. Very important. Whenever you have a new company, you bring in capital. Let's say the capital is 100,000, you bring in 100,000. So you take a capital deposit certificate from the bank that will certify it. Regarding investments, investment can be again in cash or in kind if you're bringing the investments as cash or through inventory, or if you're getting machinery. So that can be again adjusted with the parent or the parent company's account or the related party's account. That's purely to do with the accounting. But when it comes to capital, you just have to follow the regulatory requirements.
Thank you, Umar, for clarifying on the capital part. The next question, Umar, is do we have any reporting framework like the Schedule 6 in CA 2013? Do we
I
have
believe you're
any
talking.
reporting framework like Schedule 6 in CA 2013?
Okay, I believe this is about the company law in India, the 2013 company law in India, the Schedule 6. So you do have the local company law. Hopefully, we can share the link with you. It's available in English. There are almost around 200 articles, which are very detailed and very precise. Will be very helpful, and I request all the accountants and the even the management as well to go through this. It will be very beneficial. Hopefully, we can share the link with you.
Well, thank you, Umar. The next and the third question is when audit is mandatory apart from listed companies?
So audits are mandatory for any company where you have a foreign stakeholder, irrespective of the percentage. If there is a foreign shareholder, the audits are mandatory. If it's a mixed liability as well, again, the audits are mandatory. If it's a Saudi company where the revenue, Saudi company, I mean all the shareholding 100% is by Saudi and the revenue is less than 10 million, or if they have less than 50 employees, then the audit is not mandatory. But again, they need to amend the article of association. In this case, if they've not amended the article of association, assuming that they're not eligible for audit, Ministry of Commerce is going to come back to them and there might be fines. So please make sure you amend the article of association if you're a Saudi company. But for non-Saudi company, the audits are mandated. There is no work around that.
The last question to you, Umar, is for leaves and end of service provisions. If we do not get the actuarial valuation done, will it be allowed?
So when it comes to the end of service benefit, I believe we are looking to IAS 19. So regarding IAS 19, there is no such compulsion that you need to appoint an external actuarial valuation. And when we're talking about IAS 19, we're looking at something, the complex plans of employee benefits. In Saudi, it's very simple. You have an employee. There is a cutoff of 2 years to start his end of service benefit, and there is another cutoff after 5 years. And all of these calculations are available on the Activa portal right now. So the computations are very simple. So rather than incurring the undue cost, we usually take a confirmation from the management that the estimations that they've come up with are as per the laws, and the auditor is comfortable with them. So if that is there, you don't need an external evaluator for this.
Thank you so much, Umar. It was wonderful listening to you. And thank you
Sure,
so
no
much
problem.
for addressing the questions in a very crisp and precise manner. We
Sure.
hope to looking forward to you in the next webinars. Thank you so much, Umar. The next
Likewise.
set
Thank
of
you so
questions
much.
is on the taxation, where we have got 5 odd questions. So, Said Kidar, can I start posting the
Yes,
questions to you, please?
yes, Afnan.
Okay. Yes, Mr. Said Kidar, the first question is there any tax for stock transfer from central warehouse to the branches?
Pardon, could you repeat the question, please?
Is there any tax for stock transfers from central warehouses to the branches?
There's no tax as such for with regards to central warehouse and the branches. So basically, we look this as one entity. Okay, so any transfer, internal transfer of stock that's happening between head office to branch or from one branch to another. Okay, so there's no any kind of regulation that are required. However, so when we are transferring this, okay, so we need to make sure that we have proper documentation with regards to what item is being transferred from one location to other. Is there any pricing that markup that we are going to have it? Okay, if there is no markup that's happening, then there is no problem at all. Yes, if there is any markup happening, okay, then that markup will have to be justified as to what that markup is and should be compliant with TP regulations.
Right. In the interest of time, I'm cutting down a few questions. And the next question, Mr. Said Kidar, is does the foreign investment companies need to pay both corporate tax and the zakat?
No, if it is 100% foreign company, then they have to pay only the corporate tax at 20%. However, if it is a mixed liability company wherein the shareholding is say 50% Saudi and 50% the foreign company, then in this case, based on the percentage, 50% of 1% foreign shareholder will pay only corporate tax, and the 50% Saudi shareholder will pay 2.5% zakat on the income.
Okay. The next question, Said Khidr, is in the scenario of a related party, are the salaries a permissible expense?
Yes, these are permissible. However, if, for example, I being a manager of the company, also a related party, okay, so my salary, there should be some benchmarking done. If if I have to pay, I have to be paid 5,000 real, 10,000 or 100,000. Okay, there has to be what is the market standard for similar business, similar kind of a role, what exactly is other companies paying, because all this data is freely available to the authority. They'll have to just go to the GOSI and they can find out similar role, similar companies, what exactly are the salaries. If somebody has to be paid more, then there should be a justification as to why he should be paid more. Okay, what extra that he's been doing, his qualification or his role in revenue generation, then it's a detailed, justification that has to be provided to the authority with supporting documents.
All right, the next question is in the regards to transfer pricing. If the 100 million limit is for related party transaction, is it applicable on the total revenue?
No. Only the related party transactions. Okay, it's not about revenue. When I say 100 million or 48 million or 6 million, okay, this 100 million is for the zakat payers. The threshold for the corporate taxpayer is 6 million. Okay, this 6 million of related party transaction can be 1 million of sale, 5 million of purchase, or 1 million of sale, 2 million of purchase, and 3 million of loans. Okay, so it's a total value, not any individual value that is relating to a sale specifically or purchase specifically, in total.
Right. Thank you, Kedar. The next question is whether a tax is applicable if goods are sold by a Saudi company to an international company, but the delivery of goods happens in Saudi Arabia.
Pardon, could you please repeat the question again, Nafnas?
If tax is applicable in the scenario that the goods are sold by a Saudi company to an international company, but the delivery of goods happens in Saudi Arabia.
Yes, they will have to charge both VAT, okay, and VAT should be charged. And here, this particular sale will be subject to the Saudi company's corporate tax or zakat. So basically, I think this question is with regards to VAT, wherein if you are selling the items to a non-resident outside Saudi Arabia, but the delivery of the goods is happening in Saudi Arabia, but these particular goods are not gone through customs, so this will not come under the export statement. Okay, the export report that you generate from FASA. So basically, this is a local sales, and this will be applicable for VAT at 15%.
Okay, we have a couple of more questions, Kedar. One of the question is on the e-invoicing. Is e-invoicing mandatory for all customers, depending on their VAT registration status? If a customer is not registered for VAT, e-invoicing is still mandatory. However, without a VAT number, Zatka will not accept the invoice for e-invoicing. In such scenarios, how do we handle the situation?
Okay, e-invoicing is mandatory to all the VAT registered businesses here in Saudi Arabia. If you have only registered for zakat and corporate tax and you have not registered for VAT, then there is no need to comply with e-invoicing. E-invoicing is there only for businesses who have registered for VAT.
All right. The last question for today's webinar is: can a business owner provide a loan to their own company in KSA and receive interest as a return at an agreed percentage?
Yes, that can be done. However, this has to be, there should be a transfer pricing policy that has to be prepared, a benchmarking done as to what interest, what is the maximum or minimum interest that this particular person can charge this company on the loans, on the returns of return as an interest. So basically, transfer pricing is one of the major aspect that has to be looked into here, because what will happen is if it is a related party, we try to make things in our favor. We give loan and we may try to charge higher rate of interest, but however, as per the local regulations, that will not be acceptable. If the same loan had to be given by a third party, what would be the interest rate? Okay, so we'll have to this is the benchmarking that is done when we prepare the TP policy, and this is when we where we can give them a proper guidance as to what is the best rate of interest they can charge on this particular loan.
All right. Thank you so much, Sayed Khidr, for enlightening your thoughts on transfer pricing, the taxation, and the compliances that is to be followed by foreign companies in Saudi Arabia. It was wonderful listening to you. And thank you so much for all the participants. We are much obliged that you have joined from your busy schedule into this webinar to get the knowledge and know-how what Analytix has been providing. We have been spearheading towards formulating the future, which is our logo and which is our tagline. And we look forward to welcoming you in our future webinars as well. For the benefit of all the audience, we have recorded this particular webinar, and this shall be shared to your email addresses as respectively. And for those who have posted the questions and missed out on getting answers, we will be pleased to answer you them at this juncture at a later stage to your email address. And if you feel you wanted to reach out to us anytime, our numbers are given on the screen now. You may kindly note down the numbers and you can directly get in touch with our subject matter expertise. Thank you so much for everyone joining in this webinar. This is Mohammed Afna signing off on part of Analytix Arabia. We look forward to meeting you in the future webinars. Thank you so much. Goodbye.